Every quarter, Wall Street gets a reality check, a moment where the noise disappears and the truth about institutional conviction comes into focus. And this time, that moment is the Q3 202513F filing from ARK Invest, with nearly $17 billion in U.S. equity holdings. Cathie Wood's portfolio is more than just a list of stocks. It's a map of where disruptive capital is moving and which companies she believes will define the next decade of innovation. But the real story isn't just about what ARK bought. It's about what ARK sold and why those moves signal a dramatic shift behind the scenes. This quarter, ARK trimmed or reduced positions in several long-held winners from Palantir to Coinbase, Roku, Roblox, and Shopify. These weren't small cuts either. These were meaningful reductions in companies that had been core to ARC's strategy for years. And the message is crystal clear: capital is rotating. ARK is repositioning away from consumer F, facing ADEP-dependent or macro-sensitive names, and moving aggressively toward companies sitting at the heart of the AI infrastructure buildout. In her recent commentary, Cathie Wood emphasized that the real exponential phase of AI has barely begun, signaling a belief that the biggest gains won't come from the applications layer, but from the companies enabling, powering, and accelerating the AI revolution from the inside out. And in a world battling sticky inflation, delayed rate cuts, and a market still struggling to find its next narrative, this pivot isn't just smart, it's strategic. Today, we're going to break down 3 companies ARK Invest went big on, increasing its exposure dramatically during the Q3 rotation. These are firms that sit deep in the AI stack, from compute to cloud to large-scale infrastructure, and ARK believes these names represent the next wave of innovation. First on the list is Advanced Micro Devices, Inc., ticker symbol AMD, and ARK Invest's latest filing shows a major conviction move. ARK boosted its position by nearly 13% in a single quarter, now holding over 3 million shares worth almost $495 million. At a time when many institutional investors were trimming tech exposure, ARK increased its stake, a clear signal that AMD remains central to ARK's long-term view of the AI economy. What's driving this confidence? AMD just delivered one of its strongest quarters in years, reporting over $9.25 billion in revenue, up 35% year over year alongside a solid earnings beat. But what really stands out is the breadth of AMD's growth. Client revenue surged 46%. Gaming revenue jumped 181%, and data center revenue, the most important segment for AI, climbed 22% year over year and an impressive 34% sequentially. For the first time, AMD is seeing momentum across all of its major businesses simultaneously. The biggest catalyst, however, is AMD's rapidly expanding role in the AI hardware ecosystem. The company recently secured a multi-year deal with OpenAI, one of the largest and most influential AI developers in the world. This agreement centers around AMD's Instinct, MI300, and upcoming MI450 accelerators, hardware designed for high performance. AI training and inference at scale analysts widely believe this deal could significantly increase AMD's data center revenue over the coming years and elevate the company into a true competitor in the GPU acceleration market. ARK's buying behavior aligns perfectly with this trend. AMD is no longer simply catching up to NVIDIA. It's carving out its own lane with advanced GPU architectures, deep partnerships with AI-native companies, and a first-mover advantage on next-generation 2-nanometer manufacturing. AMD is becoming a core engine of the AI compute layer, and when a company shows growth across consumer gaming and data center all at once while securing blockbuster AI partnerships, it's no surprise ARC doubled down. Now let's move from compute to the infrastructure that powers it. Next on the list is CoreWeave, Inc., ticker symbol CRWV, one of the fastest growing AI native cloud players on the market, and ARK made a dramatic move here, increasing its position by over 37% this quarter. With nearly 468,000 shares, now worth just over $64 million, ARK sent a clear message. The recent dip in CoreWeave stock price is not a red flag, it's an opening. CoreWeave is not trying to compete with AWS or Azure, it's building something entirely different. The world's first hyperscale cloud designed specifically for AI workloads. From high-density GPU clusters to low-latency networking to vertically integrated software orchestration, CoreWeave is becoming the go-to cloud for AI developers who need power, speed, and scalability beyond what legacy providers can offer. The numbers speak for themselves. In Q3 2025, CoreWeave generated $1.36 billion in revenue, up 134% year over year, with a staggering 61% EBITDA margin. Most companies would be thrilled with a 20% backlog expansion. CoreWeave reported 271% growth. The backlog now stands at $55.6 billion, representing one of the fastest expanding pipelines ever recorded by a cloud provider. And the demand isn't coming from one or two customers. It's diversified across AI labs, cybersecurity firms, retailers, model developers, and even NASA's Jet Propulsion Laboratory. The stock's recent pullback had nothing to do with collapsing demand. Instead, it was tied to temporary construction delays at a partner data center facility, delays that have already been addressed without losing a single contract. In fact, many of the impacted customers renewed or expanded their agreements. ARK sees what many investors don't. The long-term trend is intact. As enterprises shift from traditional cloud computing to AI-native infrastructure, CoreWeave is positioned at the center of that. Transformation and ARC's aggressive buying signal, strong conviction that CoreWeave will remain one of the key beneficiaries of AI infrastructure spending. Finally, we have Alphabet Inc., ticker symbol GG, and ARK's move here was extraordinary. ARK increased its position by more than 153% this quarter, adding over 205,000 new shares and lifting its total investment to more than $82 million. This wasn't a cautious add. It was an aggressive repositioning into one of the world's most important AI platforms. Alphabet's transformation is happening on two fronts. A, AI-enhanced consumer platforms, and A, AI-powered cloud infrastructure. And both are hitting new momentum simultaneously. Google Cloud delivered one of its strongest quarters ever. Revenue grew 33% year over year. Profitability improved sharply, and most impressively, the Google Cloud backlog surged to $155 billion, up 46% in just one quarter. This kind of backlog expansion is almost unheard of at this scale and signals accelerating enterprise adoption of Google's compute and AI tools. Alphabet also signed a major multi-cloud deal with Anthropic, committing to deliver over 1 million Ironwood TPUs by 2026. These next-generation TPUs are engineered for high-speed inference, offering 3 times the performance of the previous generation. This deal alone positions Alphabet as a critical supplier of compute capacity for one of the industry's most advanced AI developers. But the AI momentum goes far beyond cloud. Alphabet is deploying first-party models directly into Search, YouTube, and its ad ecosystem, driving higher engagement while improving monetization efficiency. YouTube revenue climbed 15% year over year, and early tests of AI-augmented search results show improved click-through rates for commercial queries. Even with increased capital spending, Alphabet's free cash flow grew 39%, highlighting the scalability of its business model. ARK's massive buying spree reflects the belief that Alphabet isn't just adapting to AI, it's shaping it. With compute, cloud, and monetized AI products firing at the same time, Alphabet represents one of the strongest AI infrastructure stories in big tech today. So, as we wrap up, ARK Invest's Q3 2022 reshuffling reveals something bigger than quarterly adjustments. It reflects a strategic pivot toward the deepest and most scalable layers of artificial intelligence compute, infrastructure, and enterprise cloud. By trimming older positions and redeploying capital into AMD, CoreWeave, and Alphabet, ARK is positioning itself for the next transformative decade of AI growth. These aren't speculative bets. They're investments in companies building the engines, platforms, and superstructures that the AI economy will rely on. If you found this breakdown insightful, make sure to like, subscribe, and stay tuned. The next chapter of the AI revolution is unfolding fast,